Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and maybe going over some unusual whales data. And so this is Ticker Request Live, which I try to do every Sunday at 9 p.m. Eastern, going over the charts, taking requests, going over them live. And yeah, so I've got a couple up here just to start. Just really quick, couple quick levels with Big Bear AI, which is ticker symbol BBAI, as well as Intel, ticker symbol INTC. They both look like they pulled back pretty nicely, and yeah, I just wanted to go over a couple levels. But Saul, what's up? How's it going? Let's see. So QBTS as well as Apply Digital, and I've had some Applied Digital alerts going off recently. Some pretty interesting stuff happened with that, but I think for whatever reason I didn't have time to do a video on it that day, or I was thinking about maybe doing a swing trade, but I didn't have that much on the side. So yeah, I definitely noticed some cool stuff with that though. But yeah, QBTS as well as Applied Digital. But I posted these on X, but I just wanted to go over Big Bear and QBTS. And so this is one that actually Colin Gladman posted, I believe on Friday, that it looks really good. And I had actually been keeping an eye on it in Unusual Whales a couple days ago, maybe Wednesday last week. I was thinking about getting a position, but I decided not to. And yeah, so I mean, just looking at this before I throw up any drawings, Big Bear AI did come down to right around $5 a share, and that being the 50-day moving average. So, potentially some support there. The 200-day moving average is notably lower, about $2.50 there. But when I put up these drawings, so I had this white uptrend that I was expecting to maybe be acting as support over here. I think that might have also corresponded with, let's see, the 50% retracement. Let's see, maybe it was the 618. Right around, either of those. I'm not sure exactly. But, I was kind of expecting this to maybe hold as support. But then it broke lower, formed a little bit of a bear flag here. And so I was thinking, well, probably don't get distracted. Got too many things in my portfolio as it is, so, forget about it. But then, Colin posted about it on Friday. I look at the chart, it's up, over 9% from the after hours on Friday. And then, yeah, just looking at the chart, I adjusted some of these fib levels. But it just seems like there's a real confluence of levels, not only the 50-day moving average, but from this shorter term Fibonacci retracement. Right around $5 is the 786. And then from this bigger picture retracement, that is the 618, right around $4.68. The next level down that it could come to would be around 314. That's the 786. And maybe that would correspond with a 200-day moving average. But I feel like that'd be like months down the road if it did go down to that level, because, you might also notice a green line that goes back even further in time. And that is going to be the pivot high from March 4th of last year. So basically exactly a year ago, the high was $4.79. So yeah, I mean, it just seems like there's a real confluence of levels there. Not only a prior pivot high, two Fibonacci retracements, and that 50-day moving average. If I do flip over to the 10-minute time frame, you can see all those levels down there, and it did launch up, maybe forming a bull flag in the after hours from Friday. So I just think this chart looks really good. I am very curious to pick up very small position, maybe one contract, but I suspect that will not get filled in the morning. But yeah, I think that the chart looks really good. And I think that, I'm trying to do, more just swing trades, not hold things forever, but just getting to that uptrend, that could potentially be, a 30% move to the upside, maybe find some resistance there. So maybe do a move that it would be, similar to this, and then it either breaks down or it breaks out, something like that. But, yeah, I mean, I just think the chart looks really good. And I think there was some news about some insider buying or something like that. I'm not exactly sure. But then I'm just going to remove the drawings again, get over to the Intel chart. No spoilers. And I was just kind of debating. I do have a very small position. I think my average is 1930 with 7 shares, maybe something like that. Maybe 4 shares. I don't know. I'm a small position holder. But I was contemplating, do I want to buy a call? I had swung a call before for 20%. Didn't make much money with it. Could have made 100 or 200% on it. And I think that it seems like it's in got a good trajectory. But since it's pulled back, it's like, oh, well, maybe now is the time to like reestablish, get a call, buy a call back. Don't want to add to my share position. I'm fine to just chill with my average being down here. But I was just trying to evaluate, is this potentially going to be acting as support? And so this is above the 21-day moving average, maybe not so significant. The 50-day is right around $21, whereas that 21-day is at $22 just about, below the 200-day moving average. So that seems like it could be some resistance. And then, let's throw up some drawings. So I had this Fibonacci retracement, and, I had the 50% drawn up there. When I was at work, I was looking at this, and I was just thinking, well, maybe it goes down to the 618, though, which does happen to correspond pretty nicely with that 21-day moving average, right around $22. And then I also got the 786 right around 2050 or so, 2066, just below that 50-day moving average, right around 21. So, I was thinking maybe I want to buy a call here before it, goes back up to test that uptrend. But the reality is we might be seeing a bear flag here, and maybe we see something like that before it goes up. So, I think I'm fine to just hold the shares that I have, very small position. But I think as far as the contract goes, maybe I want to wait to see at least the 618 get tested. And maybe this doesn't happen. Maybe I get left behind. That's fine too. I got some shares here, not sweating it at all. But yeah, I just think that's a really cool chart. So I wanted to go over that before I get into a bunch of requests. And then Sweet Lovely, what's up? Is it PEPG? I'll add that up here. PEPG. PepGen, is that right? But then I will get to Saul's requests first. But before I get into the request, made myself a little old-fashioned. Had work all weekend, and I'm excited to have the next couple days off. But then there's Plug Power I thought was tomorrow morning, but they misscheduled it. So Plug Power earnings Tuesday morning and ChargePoint earnings after hours Tuesday. I'll stream both of those. And before I cheers you guys, I guess I will pull it up on the YouTube channel just so you guys can see it. I did put out, let's see, Plug Power date change. But I did put out this survey, this poll. And so, it looks like, let's see, how many? 8 votes. Wow, I didn't expect 8 votes. I think before I saw it at 4 votes or something. So yeah, thank you all so much for voting. And so while Plug did get majority of votes, I will do both because, let's see, 2 people voted for both, 2 people voted for ChargePoint, and 4 people voted for Plug. So yeah, I'm happy to do those. And I am, for me, I got a large position in ChargePoint. I actually kind of want to exit it though, if it does rip higher than $1. And then Plug Power, I have a pretty small position, and I maybe want to trim if it goes higher, maybe not. But just like kind of wanting to swing. And both of these don't really have that great of options data from like Unusual Whales. And so I'm not as interested to hold them long term as I used to be because I've been focusing more on Unusual Whales. But I will definitely do both there. But anyways, back to the charts. Cheers to you guys. Happy Sunday. Hey, Nameless, what's up? How's my week? Let's see. Check out new. Yeah, I'll definitely check out new. I'll add that up here. And then I'll just go through the list as they were requested. But yeah, it's been a long weekend. I worked the past 3 days, 12-hour shifts. It's the last weekend I have to do that because the schedule is going to change. And I just work Wednesday and Thursday this coming week. So Excited for the new month and to not have to be at work tomorrow. So, but I'm excited for the market to open. I'm really excited for the market to open. I feel like it's going to be a pretty, I feel like the bottom's in, at least for the short term. I think we'll see a pretty nice rally. So I'm excited about that. But anyways, cheers to you guys. Cheers to the weekend. Cheers to the start of the new week. I hope you guys are all doing great and looking forward to going over the requests. I thought I made that a little strong, but I was like, screw it. It's the last weekend I'm working. I'll make it a little strong. So if I get a little loopy towards the end, that is why. But yeah, so QBTS was the first one that was requested. This is D-Wave Quantum, QBTS. That reminds me of like qubits, which is, I don't really know. I don't know enough to know what qubits are. But yeah, okay, so it looks like I drew this little box over here. And I have this Fibonacci here, which I can adjust that. And so I'm just going to drag that up here. Then make sure that top is at 141. Oops, general 1141. So I got that there. And I'm just going to make it thicker because I think it makes it easier for everybody to see. And so, yeah, and then we do have, I'm going to remove this green box. We do have this gap here to the upside, which, could very well take a while to fill. Doesn't have to happen right away. But the close for that day is 9:55, so that's marked correctly. So we got that, gap right there. And then let's think about this. So I'm trying to get better at my volume analysis. I think this will be helpful. So what we see is really, I don't know how much we can compare to over here because this is kind of like a different scenario, I guess, following the gap down. And so like the volume up here, volume was going lower. And so as the stock price was going higher, really just with, I guess starting just over here, excuse me. So this was December 18th, and then the high over here, December 27th. Stock price is going higher. I will just draw this little trend line so we can see that pretty clear. And then with those same days, we saw RSI over here at 85.13, and then over here at 73.27. And so while the stock price is going higher, and the RSI, or the stock price is forming higher highs, the RSI is forming lower highs. That's bearish divergence. And so there's a little bit of a tell there. We also see with this getting to this higher high here, we see volume diminishing. And so that suggests some weakness. The move to the upside here is not backed by volume. Couldn't get enough buyers up here, suggesting some weakness. And then kind of like just assuming that this is like a different kind of scenario over here following the gap down. If we look here, forming higher highs in the stock price, RSI also forming a higher high over here. And this is now trading below both the 21-day moving average, which is at 609, as well as the 50-day moving average at 673. It is up in the after hours from Friday, up about $1.28%, about 7 cents. And so that would be still below this 50% retracement. And let's see. Okay, we're forming higher lows here, negating this one. So this is a, oh no, that is a lower. So this is probably has to come down to around 531. What was the low? 534. So it's still, higher lows. And with that, we see the RSI also forming higher lows. There's no divergence there. But what we see from over here, these two peaks, we see this peak on January 22nd, low volume, but right around there, I guess this was when we were kind of forming some lows, volume of 203.55 million shares. And then over here, when hitting this high, we're not comparing it to a high over here, but just looking at the volume generally over here. And yeah, I mean, I guess with the high from here, the volume was 126.92, let's say 127 million shares. But then the high over here was 93 million or 110, almost 111 million. So just like the volume behind these spikes here, lower than over here. So that's suggesting some weakness. But this is kind of making me think, I wonder if this could be like an island gap down and that this might be gapping up to then continue higher. Earnings are coming up on the 13th. So I think it's kind of risky around there. But this has had like a massive run. I do kind of like this is maybe like a cup and handle. So there's like a cup over here. And so, I mean, how I could draw this in a number of different ways. I could just do it from the highs. So let's see, I'll do it from the high over here, whatever number that is, and then to the high over here. And that's just going to be approximate. Really just there's a, I do it on the weekly, And so that kind of makes me think that this could be doing something like this. But it could also break down. It could also, if it does make a move to the upside, could get rejected from where that gap is. But yeah, I mean, I think this seems like a kind of risky with the earnings coming up. But yeah, let's look up what the company is, learn a little bit more about them. So the profile, D-Wave Quantum Incorporated is a quantum computing company. So, I mean, that seems like it's kind of like a sexy topic along with AI, which is engaged in the development and delivery of quantum computing systems, software, and services. The company builds and delivers these systems, cloud services, application development tools, and professional services to support the end-to-end quantum computing journey for enterprises and developers. The company's products include the Leap and the Advantage. The Leap Quantum Cloud Service delivers immediate real-time access to its Advantage quantum computer and quantum hybrid solver services. The Advantage quantum system is a quantum computer designed for business. It also provides quantum applications to a range of customers, including scheduling, mobility, logistics, drug discovery, portfolio optimization, manufacturing processes, and others. It offers solutions across workforce scheduling, production scheduling, vehicle routing, resource optimization, and cargo loading. So I guess a couple of things that I have concerned with this about like all that stuff. There's just a lot of stuff going on, and also the amount of times that quantum was used. It kind of makes me think of like, I wasn't in the stock market during the dot-com bubble, but just how anything is like .com, but then it's a bubble. And so this is like quantum, AI. So maybe that's a little bit concerning. It does have a market cap of over $1 billion, so I think that's nice to see that it's not like in the tens of millions or something small. Like it seems like it probably has enough to, to get done what it needs to get done. Because I feel like I've seen some companies, like some of the aviation, like eVTOL, stuff like that, where their market cap is just like millions of dollars, like not even tens of millions of dollars. And it's like, that's too speculative. It's too small. But this, seems fine. But as far as earnings go, with it hanging out around here, and like what I was saying about the volume and stuff, putting in the highs here, it has 1, 2, 3, 4, 5, 6 red days. I guess I'd be wondering if there's a gap to the downside here too, right around, that 618 at like 482. It looks like a gap fill would be based on the close from January 14th. That's at 473. So I feel like what I doodled over here could definitely be happening, but maybe longer term. What could be happening before this, though, is it could be testing 482. It could be testing $3, the 786 here, and that could be corresponding with the 200-day moving average. That would be like a really nice, strong level to find as support. And then if we also look at, the 786 over here around 3 does correspond with the highs from over here. So there could be some nice support found there. Because like over here, the 618, let's see where that cursor is. There's not really too much. There's like a little bit of consolidation here, but not that much. The bottom's over here. If I just draw a horizontal line, just going over those, it's around 5. I guess that's right around where current price is. So yeah, I mean, maybe there's some support there. But yeah, I mean, I feel like there is potential for this to go higher. But I think that there's also the possibility of 42 or $3. So I'd have a plan for those. And so hopefully that's helpful. And yeah, cheers. I see Nameless is comment on cheers, so I'll do another cheers. I get in the bad habit of zoning into the charts too much and not drinking enough. And so the next one from Saul is Applied Digital. Yeah, this one I have some alerts on it. And I had doodled this out a while ago, this inverse head and shoulders. And so I had this alert here at 750. And so that was going off, when it was over here. And it's just like I was focusing on other stuff, or I was at work. I didn't really get to look at it too much. This came down beautifully to that 200-day moving average. This is one that I should have put the time into it and looked at it. But I just saw this doodle and it's like, I mean, that could definitely happen. But, I'm just not going to get involved in it. And then with this, I also had this other alert up here at $11. And so, over here over the course of a week, I'm getting alerts that, it's around 750. And I'm just like, okay, but I decided I'm not going to partake. That's neat. And then a couple of days later, I get an alert and I'm like, man, I'm not going to partake. I need to turn that thing off. And so, oh my God, that's the $11 alert. My inverse head and shoulders pattern's playing out. But I don't think that this will necessarily play out with this kind of measured move that I have drawn here, which would be suggesting a price of around $16, basically double where it's at right now. And the reason why I don't necessarily think that's going to play out is because this got rejected from that neckline. And so maybe it is back in that dip buying zone around 750. The 200-day moving average is at 677, so $1.23 lower than where it's currently at. Or I guess I should say a little bit more than that, because after hours from Friday it was at 809, and the overnight it is at 826. And so, yeah, I mean, I think that this could still be playing out. Just like over here, this is kind of like a W left shoulder. The head is kind of ugly, kind of lumpy. And so this could still be playing out. And so there's still, I think, a potential for this to get like a 60%, maybe 50%, if not that high, move to the upside. And I guess, let's think about levels to the downside. We don't want to be going below 612. The high or the low over here was 594, the low. Sorry, excuse me if I said high. And so I can just draw, let's do a little ray here from that low of 594. And then I'll connect it. I'm going to connect it to the close from January 27th. And so that closing price was at 648. So I'm just going to make sure that's marked right. 648. Cool. So that looks good. So yeah, I mean, this is a trend line that I would like to see it hold. And so this could definitely be going lower than 750, marked here by that blue line that's there. Just make that a little bit thicker. And maybe that was that a gap that was filled? I'm not sure. Yep, that was a gap that was filled. Pretty cool. Wow. But now that's acting as support, potentially. And so, yeah, I mean, I would just think that, because this is putting in like higher lows, you could think of like the close here on January 27th, which was at 648. So maybe you could think of like 650 as like, that's kind of a caution level. But then if it goes lower than like 612, that's then putting in a lower low, breaking this trend. And then that would be kind of like maybe that's a stop loss level. And so from current price or from the close on Friday, that would, what was I saying, 612? That would be like, there's a 20% risk to the downside. And if it does go lower, maybe could add a little bit at 10%. But then if it so that would be around, where's the cursor at? Around $7. So maybe like, maybe $8 is a good level to add at if one was not adding at 750. And then so maybe it's like a quarter of position at or around 8, another quarter of position around 750. And then if it goes lower, then maybe get the remaining half at 7. And then if it breaks lower than 7 and crosses 612, so maybe like 611, would be a stop loss level. That could be a nice way to manage risk with this and trade this. I'm not partaking in it, but I feel like that's kind of a compelling way to think about it. And so what I might do is, I guess I do have this. I got to make these lines thicker just so they're a little easier to read. I'll make that, let's see, yellow. So there are some levels here that had stood out in the past. And, that light blue one that I just drew, the 200-day moving average below us. And, I'm going to leave my little doodle up there. I'll remove this. What is this thing? It's a Fibonacci retracement and this channel. I can get rid of that. There's also a thin line here. And that is the measured move, which I don't need that either. But and I can also get rid of this line here, this line here, and that line there. So I feel like it looks like a nice trade setup, including levels for managing risk. Because, if this does, start to break lower, breaks below that uptrend, it could do something like this, and then maybe form a double bottom, consolidate down here, and then, do something like that. So that's why, in my view, you want to have a stop loss there. And then, if you do have a stop loss, then maybe it does something like this. Like, dang it, I could have sold higher. I could have taken less of a loss. But, then this happens, and it's like, okay, that's a good thing. So, I think the chart looks really good. If I would have added at 750 and then been paying attention to the moving averages, which I've been doing more so now, then it's like, hey, that's coming down to support there. Maybe I want to add more heavy. And so that was coming down to like, what was the low over here? 612. So let's say I get my average in. Hypothetically, didn't have one. Let's say I get my average at $7 over here. Let's see, right around where the cursor's at. That would have been, just up to the uptrend. That's a 70% move over the course of 3 weeks. So that's pretty nice. So, hopefully that's helpful. So, don't see a follow-up comment, but hopefully you got all that. And then I will check out PEPG for Sweet Lovely. All right, PEPG. So this has been putting in lower lows. I might want to take a step back, look at the weekly, because I haven't looked at this before. This looks a little bit risky, a little bit speculative. It does look like it's bumping its head at the 21-week moving average. I don't know if that's a significant one, but there's a moving average there. That over the past week, it wicked up to that level and then closed here, spinning top. There is some volume behind that, but I feel like it could probably be pulling back before going higher, but it doesn't even have to go higher. I guess it is above the 50-day moving average, which is at around 250. So it's closed at 315 on Friday, being up 30% or 29.63%. After hours pulled back about 1.5% or 5 cents. Earnings just happened, so that makes sense why they just had such a spike in volume. And so let's see, 8 small cap stocks surging like rockets after game-changing news. So that seems like it's a good thing for them. Right here, PepGen sees fastest weekly retail following growth among biotech stocks. What's behind the buzz? And then this from TipRanks here says promising prospects for PepGen Inc. Buy rating affirmed amid positive DM1 treatment developments. Biotech alert, searches spiking for these stocks today. Let's look at the analysis. We've got analysis from 5 people, from 5 analysts. It looks like 3 of them are saying 60% are saying strong buy, whereas one of them is saying buy. One of them is saying, it looks like it says DERPF, which I think is short for underperform, kind of cut off there. But nobody's saying sell. Nobody's saying hold. So I think this one analyst is really, I think, just being a little bit speculative. If I adjust this, I think if I make it smaller, we can see the ratings behind my head. And so it looks like you can't see it, but this line here, the current, is at 315, so that's this number. And so the low, which is right here, which I imagine is from this analyst, is $3. And then the high is 20. And so the average from all of these analyst price targets is 12.20, which is a 4x from where it's currently at. Because a 2x would be about 6, 3x would be about 9, 12 would be a 4x. Let me see that. Adjust this back over a little bit. There we go. Maybe I want to have it actually like that. Yeah, they have a market cap of around 100, a little over 100 million. But that's after this move, which was from the lows over here. It went up 170%. So its market cap was, if we pull this back down, was 60% lower than what's up here. So the market cap's around 100 million. It was previously like around 30 to 40,000 or so. 300. Wait, sorry, I need to slow myself down. I think this is where I'm talking about this thing, affecting my head a little bit. So around 100 million. So that would be 30 to 40 million market cap just from a couple weeks ago. What we can see here, let's draw some trend lines, maybe from the high over here. Potentially a breakout, so potentially looking nice. And, from even, that's looking potentially pretty good. If it does, okay, so we had this move from 116 up to 448. Let's do a Fibonacci retracement from those levels. 786 is at 187. So we dipped lower than that, caught support, it looks like, from the 21-day moving average, which is around 150, maybe 145. Also, it nearly filled the gap here, so I find that to be kind of compelling. I feel like gaps are a really nice way to play with people, expecting this level to be filled. So the close on February 21st was $1.37. And so we can see that gap right there. Nearly came down to fill that. People might have been, hey, this big move, I'm going to wait for this gap to fill before I get on board. nearly comes down, teases them, pulling back to that 21-day moving average, finding a low over here of $1.50, finding support, 21-day moving average, and then getting up, closing the week above the 50-day moving average around 250, also going above this downtrend that I drew, which maybe it's a little bit wonky, but that does also seem to correspond pretty nicely with that 50-day moving average. So I think that's a pretty nice level there. Closing the week above that. So I think that looks pretty good. We do see, though, that with the volume, had this massive spike in volume on that earnings day, and then the volume up here seems pretty weak. So for the 28th, volume was 9 million shares traded versus over here, 109 million shares traded. Even on this spike here, 26.5 million shares traded. So this seems pretty weak. So what I could see happening is best case scenario. I'm actually going to redraw that because it's a little bit wonky. Best case scenario. Yeah, why is it doing that? Maybe I want to do it like this. Best case scenario, pull back to test that as support, that 50-day moving average as well as that downtrend, and then it goes higher. It just doesn't have the volume behind it. And the moving average also pretty up here. The RSI, though, is still below 70, so I think that there's definitely still potential for this to go higher. But, I mean, I would look for... Yeah, and also look at the 786. 187 corresponds beautifully with the high from February 26th, so Wednesday of last week. The high was 187 being, a penny off, actually being exactly that 786. So coincidence? I think not. There's meaning behind that level. But if not, let's see, maybe the 50% or maybe let's try the 618 first. Let's not get ahead of ourselves. Let's do this one at a time. Let's do the 618 right around there, 243. So that seems like that would be like right now, I think it's chasing, especially with this lack of volume behind the move. So what I would like to see if I were to participate in this, which I am not going to participate in this, I would think 142, 1420, have fun with, 2420. Have fun with it. 420 to 420. This level is at 242.8, maybe 243. Play it safe if you really want to get a fill on that pullback, or maybe just 250. But I think something like this, before the possibility of it going higher, but it could also fade lower. Maybe they're going to raise capital or something on these big moves. So good to consider that. It does look like it, prior to this spike, if I remove my drawings and I switch over to the weekly, this thing looked like it was kind of dying, Not much volume and just totally faded, or not much volume relative to this spike. So maybe that's a boost, like a lifeline or whatever. It's being brought back to life. But yeah, those are the levels that I would be keeping an eye on. So the 50-day moving average, the 21-day moving average I have here, this gap to the downside, and then the 618 as well as the 786 from this retracement. And that downtrend that I drew more or less just follows that 50-day moving average. And yeah, we got the 200-day moving average up here, maybe around 8. So maybe this arrow could be bringing it up to 8, or maybe just a 2x to 6. Seems like a pretty interesting one. And I don't have that on, let's see, the DGen Ed list. I'm going to add that there. So hopefully that's helpful. Hey, Ricardo, what's up? And Saul was saying that I was going to buy some, speaking of ALPD, applied digital, APLD. Hopefully I went over the right one. APLD, yeah. It's 750, but didn't. And so, yeah, with APLD, basically I was the same. If I had it's kind of like, I have these alerts, and usually it's just like, that's interesting. But if it falls on a day where it's like, wow, I just took profits on something, like which I recently did with like Unity, and it's like, oh well, crap. I'm still long Unity, by the way, but took some profits on some calls that I had, lowering the risk. And it's like, oh, I got all this cash on the side. Oh, and I'm getting alerts on Applied Digital. Maybe I'll roll it into there because it seems to make sense. And this 200-day moving average. So yeah, those levels that I went over, hopefully they're helpful for you. And then let's see, Ricardo is asking me to look at QSI. So I'll definitely add it up here. I think I've got one more, which is new before I go over to QSI. I could definitely throw that up. Quantum Sci Incorporated, or Quantum SI Incorporated. But yeah, I will switch over to new to go over this for Nameless. Wow. So we got this gap down here. So the gap fill would be getting to, is that 1334 was the close here. So just make that dashed, make that blue line there. Cool, awesome. So glad it's helpful. And let's see, with this seems like not such a good look. And yeah, so this reminds me, it's not exactly, but it reminds me of a falling three methods where you have, a really big red candle and then you get some inside bars going up. And then you get another big red candle down. And so this is not the exact same because, what you'd want to see with like for a falling three methods, that would be like this here. So we saw that. And then over the course of these days, you'd see it do something like this. But then on this day, it goes like that. So that's a falling three methods that would suggest further downside. Oops, I bumped into the volume there, which I think maybe I made that too big. I'm not sure. I want it to be just above Ed's head for when I just the RSI, I need to be just above his head. So yeah, that's I think what I need. But really, maybe I want the RSI to be at the top. I don't know. I don't think I need to be fussing with this stuff too much. But yeah. Anyway, so that's a falling three methods kind of pattern. And so I'll just show you, show you what that looks like from over here, falling three methods. And so that's, like this pattern. And that's, or drawn like this, something like that. I can look it up on Investopedia just to get a little bit more information on it. So the falling three methods, what it is and how it works. And so excuse all of these ads. That's one of the things I don't like about this website. There's so many ads on it. But what is the falling three methods pattern? So the falling three methods pattern is a bearish 5-candle continuation pattern that signals an interruption of a current downtrend, but not a reversal. So the pattern is characterized by 2 long candlesticks in the direction of the trend, in this case, down at the beginning and end. 3 shorter counter-trend candles appear in the middle. And this can be contrasted with the rising three method, so it's just the exact opposite. And so we can see that here with, bearish candle to the downside, candles moving higher, and then a bearish candle to the downside. And so this is effectively a bear flag, really. It's just like a very specific formation of a bear flag. And so I kind of see this as being like that. And so something that we can do with this kind of pattern, which is probably giving a more bearish outlook than one would expect, but that would just be by doing a Fibonacci extension. So going from the high here from around 1408, coming down to the low here when it started to consolidate around 1074. And then from there going up to the high, which, could be from up here, but that was at the start. So we want to go over to here. And then from that, we can get an idea of the 100% move to the downside. And so I'm just going to basically take the measurement of it over here so you can get a better understanding of where this 100% move comes from. And so I'm just going to take this measurement here. from that top point to that bottom point of that retracement that I did. And then I'm going to move that to this high over here, approximately. And then so from that, I take a step back, and that corresponds, this measurement that I just did corresponds with the Fibonacci extension. I don't know what this is from, but I guess I was kind of suggesting it go lower before. But that's that 100% extension is at around 850. And so, yeah, I mean, it's just like basically the move from here to here would be replicated from here down to here. That's what that is. I mean, there is some hope, though, that it could be holding above the lows here, 1018. But I kind of view that as like a red line in the sand. Do not want to go lower than that, and that might be like a cut losses type of level. It does, however, though, look like it is forming higher lows still. So maybe we want to look at that from over here. So I'm just going to draw with the ray tool from the low of 967 and then get to not necessarily the lows over here, but just kind of marking, you know, where there's that consolidation here. So I could, you know, adjust this to the open from December 30th, or, you know, maybe better, I could do it from the close over here. That is the close from December 23rd. And so then we don't see any closes below that level. We see some wicks below, but no closes below. And so we want to be paying attention to that trend line. Higher lows, we want to be seeing them put in. And so it's potentially right around that level. And so I would really just be keeping an eye on like 1018. If it goes lower than 1018, then it could be coming down potentially to 850. Or, you know, it could maybe just be coming to the lows from over here at 967. But yeah, I mean, I think that this is looking pretty weak, pretty big breakdown. And this pattern, you know, it's also like over here, it was above not only the 20-day, not only the 50-day, but also the 200-day. And this looks like it's now below all of them, including the 50-day. If I draw a retracement here, it's like the 786 is going to be above where it's currently at. So I think that this looks fairly bearish. Although if I look at the after hours, it went up 1.39%. But that's really just trading, you know, 15 cents above 1075 where it closed here. Overnight, though, it's up about 3.5% at around $11.12. But, you know, I don't necessarily trust whether it's, after hours or pre-market or especially overnight trading, just because there's such light volume. It can be a very easy way for like retail to get excited about a direction and then they get rugged right when the market opens. So, yeah, I mean, I would say definitely want to see this holding above 1018. And I mean, if we need to draw a level that corresponds with over here, maybe that would be around, let's say 1050. Arbitrary, but the low from Friday was 1068. We got some consolidation over here. What was the high from December 20th? 1045. So let's just say, you know, being kind of arbitrary with that, but let's just say 1045 is, well, it's not a red line in the sand, it's a yellow line in the sand. And I would like to see it holding above that level. Maybe it wicks below this light blue uptrend that got drawn right there. Maybe it wicks below, pierces 1045 or 1050, and it looks like this uptrend is right around 1050. So that might be a level to evaluate. Is it holding the bottom? One thing that's maybe a little bit encouraging about this is with this big down move, high volume, so not really too surprised there. The volume from Friday, the 28th, was lower volume, but still it's pretty elevated compared to, you know, the consolidation over here. So that makes me think it's probably going to continue down. And while I don't know that it's necessarily going to be hitting this 100% extension at 850, maybe $9, let's say. Yeah, I mean, I just think that like from current price, if it goes down to $9, let's say it's not even going all the way to that 100%, that's 16% to the downside. The 100% extension is around 20% to the downside. But if it goes down to this red line, that's 5%, 5.5% more. So, if one was to have a stop loss there or, whatever, however one wanted to manage that, that's like a further downside of 5.5%. So that's not really too bad. But generally, I think it just looks bearish, unfortunately. Yeah, and then let's see. This is, higher lows so far, but also higher lows in the RSI. So there's no divergence there. We do have, very interesting, I'll look this up, but we do have, what do we see here in the stock price? We see lower highs. What do we see in the RSI? Whether I do it from here or if I do it from here, doesn't matter. What do we see? Well, let's just do it from here. It's a little more dramatic. Higher highs. Let's turn over to Google to see what, let's say, hidden bearish divergence. I'm just going to suggest that's what it is. So from this little thing, we got lower highs. Okay, so lower highs. Okay. So no matter what, this is bearish. When looking at the highs, it's bearish. When looking at the lows, it's bullish. And so here we have lower highs and higher highs here. And so that's bearish, hidden bearish divergence. It's sneaky. It's trying to hide it. So yeah, I mean, I think that this is just showing a lot of weakness. So I'd be cautious with this one. And then PAGS, I will definitely add that as well. Do I think it will reach 12 or higher? I'll throw it up here, but then I actually have a few ahead of you for that request. One being QSI from Ricardo. And then also Disclosure Crypto is requesting Gari Network. Very curious to be looking at crypto. And actually, before I go over that, I might pull up Bitcoin really quick because I think some stuff happened with it today, not based on the move up to, but where it's kind of stopped at. Pretty cool based on the drawings that I've done in the pre-market preps that I try to do every day the market is open. But let's see, QSI, let's go over that for Ricardo. Okay, it looks like I have gone over this. It looks like it's around the 200-day moving average. So that seems pretty good. I'm going to clean up my drawings here. This gap has since been filled. This is no longer useful. I am just going to clear everything so I don't have to delete everything individually. But yeah, this is hanging out right around the 200-day moving average, which looks like it's a price of $1.36.3. It's a simple moving average, $1.36.3. Closed above that. And, I mean, clearly we're putting in higher lows, so that's good. This is just opposite of what I was just talking about. We're putting in higher lows here. So let's say we want to hold that. And then in the RSI, over here on November 19th, the RSI was at 35.33. Now currently, it's at 33.76 and was actually a little bit lower on Thursday. And so that's a lower low in the RSI, slightly, but still it's a lower low. This is a higher low. So if we look over here, we've got the lower low in the RSI. So the lower low in the RSI, higher low over here. That's hidden bullish divergence. So I think that looks good. It's at the 200-day moving average. Earnings coming up tomorrow, so very risky. Does this have options? This does have options. Let's flip over to unusual whales. I mean, my suggestion for this is that it looks like it's at a good dip buying level because it's at the 200-day moving average. And while this is just based on this point over here and the fact that the current price is higher than it was over here, and we're seeing hidden bullish divergence, that makes me think that this is at a good dip buying level. But let's draw the Fibonacci retracement here from 0.612 to 577 below the 786. So that is not useful. But yeah, that 200-day moving average, we do have a gap that has not been filled. Pretty crazy over here. The closing price on November 11th was $1. That's an important level for a number of reasons. For compliance, it is listed on the NASDAQ, and so there might be some compliance issues with it being below $1. But whatever has happened, it doesn't seem to be having compliance issues like it potentially was over here. But yeah, so $1 right there. That's a gap. So I need to adjust this so we know it's a gap based on that gap that has not been filled. Putting in these higher lows. Let's look over at unusual whales. And so how do I want to do this? I'm just going to go over to the flow. And I'm just going to type in QSI. No trades. I'm going to clear the filter. QSI. Oops, QSI. And so I don't care which contract I'm going to look at. I'm just going to pick this one at the top because I just want to expand this data here. This is like the fastest way I know how to do that. And so what we see here from the data on Friday is the net put premium in the red, more or less flat. It's negligible. What we see in the green is the net call premium. That's negative, so that suggests selling. And that net call premium is down, but it's only down by about $31,000. So it's not a huge amount of money. But it's, a $1.40 stock. So it's not a huge amount of, nothing too crazy there. If I expand this to the past 30 days, oops, sorry. We can see that the stock prices just come down a lot lower. There was somebody, net call premium back here on January 22nd going up by $773,000. So that's notable. So that's something I might want to look at. So what I can do is I can filter this to January 22nd and so we can see what was going on with that. So let's come back over here to January 22nd. And so I am going to adjust this filter by the time range to January 22nd, just the full day, apply that there. And then so what am I seeing in this? That, it's a lot of calls being bought. And so, yeah, there should be something that stands out from this day as having a pretty high premium. Right here, $428,000 in premium on this $3 call that expires, $3 strike call that expires in January on the 16th of 2026. So let's click on that. That is I guess the stock price is at $2. I don't know why it says that after hours. No, but so QSI. I did this correctly. QSI. Okay. Hopefully this is right, Ricardo. And it was Ricardo that requested this. Yeah. And so, yeah, I'm just going to click on this contract that has the $428,000 on it. Lot of money. That's an unusual order. So I'll click on that. And then what I kind of want to see, I got the data over here for the 1 day. But I want to look at the date up here. I'm going to adjust this expiration to going back. Oops. How do I scroll to? What? I can't adjust the expiration date. Oh, because this is... That's what I want to see. That's January 22nd. So... expiration So maybe I can type it. It's like glitching on me or something. Okay, so let's see. Clicking on this one again. Now I want to adjust this. It's not letting me. Okay. So I'm still kind of learning this. I should be able to adjust the date here. So I could see like the high resolution information from that day. What I might do is, sometimes this like bugs out in Chrome. Maybe I'll just open up a new window. Let's see if this helps. Let's open up that contract. That's annoying. Okay, so what I'm going to do is open up Safari. And then hopefully I don't have to, just doing it on my screen over here. So I've got this up here. And then we can click on this, same one. And then I should be able to, I don't know why it's bugging out like that. So that's annoying. I should be able to adjust the date. Won't get into it over here. Sorry for others who are not interested in this stock, but I should be able to adjust that so I could look at the like 1 day high resolution going back to, when there was this spike. And so on that day, I could look at the past 90 days. That stands out. Basically all of the history of this contract. On that day, it looks like the candle premium for the entire day, because unfortunately I can't look at the high resolution data for that day. For whatever reason. Sometimes unusual oils can be a little bit buggy. It's like a small business, so over here, $838,000. It looks like going long with an average fill for this contract at $1.89. And so if we scroll down from here, we can see how that kind of changed. The data down here changed. And so I need to get Ed out of the way for this. And so here we can see the information for each date. And the date up here, this was January 22nd. Just scroll back here to the date of, even before January 22nd, what was the open interest leading into January 22nd? 900 contracts. Okay, so not a huge amount. And then on January 22nd, we see a volume for this one specific contract over 4,000 contracts. And then we see the open interest increase from about 900 to over 5,000 by barely, 5,001. That open interest increased by over 4,000 contracts. So that is bullish, suggesting that, whoever was buying here is expecting it to continue higher. But then the stock price, the premium price over these past, let's see, from there, if I adjust this back, past 45 days. So here, maybe I can do it 30. Okay, so I can do it there 30. I can also do it 30 over here. And so we can see that as the yellow premium decreased, we can also see that the stock price decreased. And so that seems like it was a bad trade. But we can see, are they still in it? There have been some candles, so maybe they were trimming as time passed. But I suspect not, because these candles are so much smaller than that big one. And so if we look at the open interest, which was around 5,000, we can see that it's increased to about 5,450. So that's suggesting that it's still long, that the whale that put, if we look back on that date, this volume had a premium of $838.5 thousand, nearly $1 million. That's still going long. And so while that's not millions of dollars, which would be nice to see for this stock, that is unusual. And they're still going long. So that is bullish. And so that could be suggesting that a stock price, currently is around, 140. And over here, where there was this big spike in that net call premium, the stock price there was around, it's not telling me the stock price above, but that was around above 225. So that's, almost $1 more than it currently is. We look over at the chart here, that big buy was from probably around here, January 22nd. So they bought around here. So yeah, I think that there's a good chance that it could get at least up to the price that it was at on January 22nd. And let's say the high from that day. And so that is a move of about 100% to the upside. So I think that there's a lot of potential there. The data looks good for that. If I look at it on the more short term though, let's see the other tab that I had open, this over here or this data here. If I scroll to look at the bearable slider from Friday, 58% on the bearish side, so maybe it could go a little bit lower, but we got to be thinking about the premium. That is a net call premium decrease of about $31,000. So that's not a huge amount of money compared to the over $800,000 that still appears to be going long on it. So maybe this is also right here, maybe that's just people who are holding calls, taking some profits, or really cutting losses, I would imagine, because it's been the stock price over the past 30 days, as I had shown, has just come down. So maybe it's just people saying, hey, I'm cutting my losses before earnings because it's maybe going down more. But the data over here, from the table that I just went over, all of that, with this big candle back here, suggests that there's some more bullish potential between now and January, so 10 months from now. But just looking at the chart here, I find this to be pretty compelling at the 200-day moving average. And so I like it. I think it looks good. I'm bullish on this one. I'm not going to be in it, so I can't necessarily say I am bullish on it. But if I were to put money on it, I would bet that this would go up around earnings. So yeah, hopefully helpful there. And so sorry to keep Disclosure Crypto waiting. I will flip over to Gari Network right now, but I did just want to, just for fun, pull up Bitcoin real quick, which I do go over during pre-market prep. And I just kind of took a peek at this before starting to stream. I talk about this every morning during pre-market prep. And it broke down, and I talked about, levels that I talked about, dip buy-in basically between 94 to 91,000. Then if it broke below 91,000, I think I was talking about 86, consolidated there a little bit, a couple days, but then broke lower. And I was also talking about 80 and 79. And so I am very proud to say that I bought the dip, not a huge amount of $10, so nothing too crazy, but I bought the dip at 79,000. And now it's broken back up, and I was kind of expecting it to, maybe it'd find this yellow downtrend as resistance, blew past that, and now it's actually finding this red uptrend that had acted as support when we were forming higher lows. We're getting a wick up to that level, and so that might now be acting as resistance. And so I will do my doodles during pre-market prep, but I could see it consolidating below that, forming a bull flag, and then continuing higher. So that is what I would bet with that, with Bitcoin, with crypto in general. And so I'm sure that will apply to Gari Network or Gari Network. I don't know, is it plural? And I also had the same thing kind of drawn over here, but I think I just replicated what I had done, during pre-market prep. So Gari Network. So I think this is what I want. So this is on the 1 day. It's probably UTC is tomorrow, I imagine. So this candle is for the future. This is for March 3rd. But yeah, I did see a little bit of a bounce on the 2nd. So when Trump announced that there will be a strategic crypto reserve for the US, I think it would be cool if we named that crypto reserve Fort Blocks, as in blockchain. And so yesterday, so on the today on the second, it went up by 4%. Not a huge amount, but yeah, I mean, with it, there's potentially, higher lows being formed. And really, just generally, I think that, it's like this kind of reminds me of this over here. So maybe it consolidates like this for a week and then maybe it launches. I have no idea. But yeah, I mean, I think that we're kind of, I think that crypto is going to be ripping faces off. I have had the plan of thinking that we'll be seeing a top in the market ranging between May and the end of the year, the end of December. And that's really just based on the cycles from 2021 with the valley in the middle of the year, but hitting a new all-time highs in like November. And then also 2017, I believe, hitting all-time highs at the end of the year. And so I think that we're going to be seeing, alt season and Bitcoin's going to continue to rally. I think that we'll start a bear market across markets in 2026, or at least I think that anybody who's being really bearish on the market, they're talking about being below an uptrending level of resistance. And if that level of resistance is uptrending, it means that we can float higher. And so I'm more on the side of things are going to be doing this. So yeah, I feel like, hold tight. Like for me, for my alts, I don't have any Gari USD, but I do have some alts. Most of them I just have on cold storage. Others, I'm still building positions. I do $1 DCA every day. I was excited to see Cardano going up because I've been accumulating that, but that's just been like the past month of $1 every day. So I own about $35 worth of it, which is now like $45 worth of it, because it was like a rip your face off rally today. I'm still just doing $1 DCA, just chilling. If it pulls back, great. If it keeps going higher, it's kind of unfortunate because I could have been more aggressive lower, but I'm just chilling. I mean, and so I'm not like FOMO buying the dip on alts. I'm just doing my normal plan. And any dips that I was buying was Bitcoin at these levels that I had highlighted. And so, yeah, I think that Gari Network, among other cryptos, are probably going higher. So I feel like that's good. And then I will now switch over to PAGS for Nameless. And so let's look over at that. And so Nameless had a specific question. Could you check out PAGS? You think it will be reaching 12 or higher? 12 or higher would be right around here. I don't know. Let's see. Okay, so let's think about this. Over here, it was consolidating, and effectively that was like a bear flag before it broke lower. And then here, maybe there's like an inverse head and shoulders pattern going on. But what we see with this big wick high, that seems like a pretty big reversal because opened up here, wick higher, and then closed all the way down here. Massive bearish engulfing candle. The volume on that day on, February 21st was 8.65 million. When we were last at around that price, the volume was 8.73 million, so a little bit higher, but not notably. But really just like a couple days before then, when we were really just starting to get up to that level, like not this green candle, when we were starting to move up there and then getting rejected a little bit before going higher. Up here, when we were like starting to consolidate, just beginning to consolidate at that level, volume was at 32.49 million shares. On this day, it was 8.65 million. So notably lower volume there. The MACD here does, I'm going to bring Ed back, so I'm not doing this alone. And the MACD here did just flip bearish. or red negative the past couple days, past 4 days. I could see it potentially finding support at the 50-day moving average, which is at around $7. So I kind of see if it does hold, if it does respect $7. If I do a Fibonacci extension, that 100%, I feel like it's going to land right around $7. So yeah, I mean, that'd correspond with, approximately that 50-day moving average. Let's see. I'll remove the 50% and the 65% just because we don't need the golden pocket there necessarily, but just that 618 might be a nice level to keep an eye on at 720. But let's look at the 786. That is at 672. And so, yeah, I mean, those are all some levels that it could be pulling back to. I feel like this is probably going to continue lower to maybe find support around 7. So really like ranging from 720 down to 670. Right around there. I do have this line of like consolidation over here. If I throw up the volume profile, it doesn't show too much. I was expecting something over here, but there's just this like little lip here corresponding with the consolidation over here. But it does look like that's like, I think the, what is that dashed line? That is the, oh wait, I don't want this. I want for the, over here, let's look at the settings. So the style volume average low is right here. So that line. That is at 670 approximately. 668 it looks like. But yeah, I mean, you zoom out and it adjusts. I'm going to get rid of the volume profile there, just so it's not too cluttered. But yeah, could I see this going up to 12 or higher? I think this probably will be going to that range, 720 to 670, because it doesn't look that strong right now. MACD volume not being too heavy. The RSI doesn't look like there's any sign of it cooling off, like it's just been kind of falling off a cliff here. There is maybe potential for an inverse head and shoulders pattern. It does look like it got rejected from over here, so that's kind of a cool line. But I might adjust the color of that to be, I'll do it orange, whatever, doesn't mean anything. But, I mean, over here, just do a trend line, so it's kind of casual. So we have just getting to like the peak from over here. This is, potentially an inverse head and shoulders pattern. There's the left shoulder here, head here, and maybe it's forming the right shoulder. And so, yeah, I mean, really, I find the 50-day moving average to be compelling. Looking at this, I've got all these levels down here. Anyone's a possibility. But what I think could be happening is, pull down a little bit more, find support at that 50-day moving average, and then go up here, and then maybe consolidate before doing something like that. This move up here, probably a little general. Maybe I'll just redraw it. So, thinking like it just coming from here, come down to there. And then maybe it goes up like this, consolidates a little bit here, goes up, then retests, and then, goes higher, something like that. I could see that happening. So, yeah, I mean, I think that 12's possible. I think it'll go a little bit lower. And so I just look to the 50-day moving average around 7, but here it's a 706. So I just be prepared for that dip. And this might also take longer than how I have it doodled here, but that could still be an inverse head and shoulders pattern. It's an ugly one with, the shoulders like, I don't know, you guys are like that. So, but yeah, I mean, then form a bull flag and then break higher. So I find that to be compelling. And that would also, I mean, we see the 200-day moving average. That would probably coincide with right around here. So yeah, I mean, I think that seems like a pretty nice play, but I just be prepared for about a 30 cent to 40 cent drop further, and then kind of evaluate that, looking at volume, seeing if RSI is starting to turn around, looking at the MACD, seeing if that's starting to turn around as well. So yeah, hopefully that's helpful for you. And then I'm just going to take a sip of this. And I might sign off after the long work week, unless there are some further requests. But yeah, I think I dived into some good charts there, so hopefully that's helpful for you guys. And yeah, I might just out of curiosity. Man, Bitcoin. I'm so excited. I don't know how you guys feel about the year of 2025, but I feel like for me, it's like, it's not going to be like, oh my gosh, on this one trade, I'm going to make so much money that it's going to change my life. I feel like this year is going to be the year where I actually like implement, basically all that what I've been learning and doing this channel and going over the analysis, learning unusual whales, implement that into basically a strategy where I can focus on YouTube and trading and work for myself. So I just feel so excited about this year. And with Bitcoin going higher, I feel like we're going to see highs in that. I feel like the stock market's going to continue higher. Like I said, though, I think that we're going to be switching potentially into a bear market starting next year. So just like 2021 was really good for Bitcoin and the stock market, but 2022 was the start of a bear market that lasted a few years. And at least, yeah, depending on what you're looking at. But yeah, I mean, and with that, I'll be getting more into the UVIX, getting more into natural gas, getting more into shorting semiconductors with SOXS, shorting SPY. I mean, there's going to be so many ways to make money and following unusual whales, buying puts. So yeah, I mean, I'm really excited about this year. The end of this year. I hate my job, but I'm on a pathway to quit it this year. And yeah, I mean, I just think that what's going on with Bitcoin, it's like everybody is waiting for it to come down to here. And so that's exactly what's not going to happen. And yeah, I mean, look at this. This is my doodle from a pre-market prep. I basically gave two scenarios. One is that it continues lower, or two, that it starts going higher. And we went rip your face off, rally higher. Like I'm a little conservative with the time frame on that. So that's pretty cool. That is a V-shaped recovery. That is a good look. Look at this in the RSI, dipped to 22.26, starting to go higher. So feeling good about Bitcoin, feeling good about all the rest. And with that being said, I might just throw this up in case you guys are not. In case you guys have not, make sure you like the video and make sure you subscribe to the channel and turn on alerts if that's your thing. Personally, I don't like to have alerts on, so no problem if you don't like to have them on. But yeah, I mean, as always, those are just my thoughts. And if you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And so what I will be doing tomorrow morning is a pre-market prep. I'll start streaming at 8 a.m. Eastern. And then we'll see what's going on with the markets. And then I'll probably take some clips from it. Oh, Nameless. Yeah, I can definitely do Fastly. And then I'll probably end the stream. Good call with requesting that, because I was about to close it down. So Fastly. Dang. This is one that, like, Fubo, I definitely had a call on, and it gapped up, and I was not in the call at that point, and so I could have made a lot more money on it. But with Fastly, I took profits around here probably on some calls. But I'm glad I exited them. They were probably June expiration, in and out. Don't hold stuff to expiration. But yeah, let's see. I'm going to try to clean this up a little bit. I am in love with the cup there, so I'm going to leave that there. We do have this confluence of levels with the 786 as well as the low from over here around 620. But what we can draw based on what's over here, I'm just going to zoom in so I can do it a little bit like fine-tuned. So what I can do is based on the low from over here, so that's at 553, and then I can intersect with what looks like it was the open from whatever date this was, and then I'll just kind of evaluate that. So it should be 553, and then the open from November 18th was 628, so I'm just going to make sure that is 628, 553, so that looks like a good line. I'm going to do this light blue. I wonder if this coffee cup was the origination of me finding this soothing light blue color. I was thinking about it the other day. I find it so funny. I wonder if, other than hopefully, I wonder if soothing light blue color is one of my most common phrases. But yeah, so we have broken below that uptrend, so that doesn't look so great. Maybe this is a fake out break. I think that really what we want to see, the low over here was 625. What I will do, I have this alert here. I'm going to adjust that. Wow, that was going off and I wasn't paying attention to it. Could be a bear flag though, just looking at this from that alert. Downside move, consolidation, could be a bear flag. I'm going to adjust this alert to be at 625 because I feel like that is maybe a make or break level. It could also be a sweep out, fake out level that it does go lower than the lows over here, shakes people out, and then it starts to rally. But what we see here, I think I'm better at volume analysis to the upside than I am to the downside. But let's think about this. We've got this gap down. Volume's pretty high. And so that kind of makes me think, oh, up here, volume's high. It's being bought up, but then it gaps down. That suggests that, I don't know, it's being pushed up. People are buying the dip because it started here and then got pushed up here. People are buying the dip up, but it also gapped down so much. They didn't buy up the dip enough to push it above the 200-day moving average here, which is right around $8 a share. Attempted to get up above it, put in this Dragonfly Doji, a little bit of hope there. But really, I mean, that Dragonfly Doji, that's effectively a hanging man because there's this upside move. There's no volume. Look at how much that volume decreased. No volume, even though it's closing higher. And so that's not a very strong signal. And then it continues over here. Volume picks up on this downside move. That means that people are selling as it's going lower. They're not buying over here. They're dumping as it's going lower. And then it starts to consolidate over here. Bearish engulfing candle. Maybe there's a little bit of hope here because we got a wick to the downside, closing in the upper side of trading on Friday's trading. And let's see, volume increased a little bit. So buyers are starting to step in a little bit. But compared to over here, like even just with this candle here, where there's not an exceptional amount of volume like over here there was. But so this being like elevated but not being super spicy, volume 5.28 million. Over here, it does increase, but it's 3.82 million. Kind of weird that it's 0.82 for both of those. But over here, 2.7, so it did increase. So, like this downside move here, selling, volume was at 4.2 million. So there's a lot of selling there. Over here, it comes down, but volume's only 2.7. So there are fewer sellers here. But when we see this push in volume, that volume's increasing a little bit, it's really just keeping it kind of flat. And so the buyers aren't able to really push this higher. So I feel like this is a bear flag that will probably be breaking lower. And so, yeah, I mean, I feel like 625 alert will be going off. And so when that happens, I'll reevaluate it. And maybe that would be like, hey, it's a fake out break below this level, shaking out weak hands. But it's still forming higher lows relative to the low over here. So it would not be breaking that trend. So 625, I think, could be a nice fake out break below level to add to. But I think that we should look over at unusual whales to see what's going on. So Fastly, I was tracking it, but I stopped. And I have to say, I want to clear that. So it's all getting a little fuzzy in the head. So I'm just going to get a little fuzzier. And so let's look at this data here. I don't care what contract. I just want to look at the premium data here. So I'm just going to open that up. And so let's look over here. If we look at the bear bull slider, which doesn't necessarily have to mean anything, 54% on the bullish side. And that is going to be majority bullish because two factors. One is that we see net call premium in green going up, although starting the day negative, but going up, suggesting there's buying of calls. And we see net put premium starting the day positive, but then dropping, ending the day negative. So that is suggesting selling of puts. That's also bullish. We see stock price starting lower, but then it going higher. So maybe that's a bottoming signal. But let's look back over the past 30 days. What really stands out? Does anything stand out to you guys about this data? There's one thing that stands out to me, and that is this day, which was February 12th. We saw a spike, an increase in net call premium of $888,000 and $888,660. 888.66. So that's nearly $1 million increase over the past 30 days. That stands out as being kind of unusual, kind of uncharacteristic. And so as the stock price that was in yellow was plummeting on the 28th, not on the 28th, the 12th, sorry, that calls were being bought. Stock price has continued lower, but, so these people were a little bit early, in their position. And so what we can do is I did not do this that well. So I'm just going to open up another tab, go over to unusual whales, look at the flow data and the flow feed. And actually, no, I did this fine. I just need to go over here, look at the flow. And so I want to isolate this date, which was February 12th. So let's come over here. Let's isolate this by the time range, just looking at February 12th. Wait, that's January, sorry. Eek. So I want to do February 12th. So just that one day, February 12th. Let's apply that. And so there should be some premium on this day that stands out as being unusually large. All of it is tens of thousands, except for this one contract, this one order, which was at $369,000. And so that is the $9.50 strike call that expires a couple of weeks ago, 2 Fridays ago, February 21st. So let's look at that. That's some unusual data here. Let's look at the past 90 days. So for this contract, February 21st. So what we can see is, of course, this ended not so good, but we can see looking at past 14 days. Yeah, this big spike here on the 12th. So let's scroll down here, get Ed out of the way. We can see that on the 12th, we had an initial open interest of around 27. 6,200 contracts were traded on the 12th. which led to an increase in open interest of 5.9 thousand contracts. And so we see effectively that open interest was around 5.9 thousand. And then the following day on the 13th, it looks like, I imagine the same person is like doubling down, not doubling, but throwing extra money on it, bought an additional 1.5 thousand contracts. So open interest is around 7.5 thousand. Doing it again, open interest over 9,000. And then so open interest continues and ends at $9,000. So it kind of seems like, what's it called when people like love pain? Yeah, this was like a week to expiration, somebody just YOLOing their, look, this is crazy. $800,000, thrown down the drain because that open interest resided. And that sucks. They lost all that $800,000. So that was not a good signal. That was an idiot. That was a degen who lost nearly $1 million on that trade. Unless there's something else going on with it that I'm not aware of. But yeah, I mean, I think that 625 is probably going to be hit. I will be alerted when that happens. And then maybe because of this, I will consider doing a follow-up on that because of my beloved cup that I have drawn there. And I can probably just delete this channel there. And yeah, so, I mean, hopefully that was helpful, Nameless. Hopefully you're able to get all of that. And then I, rather than swigging this by myself, I'll just swig it before I end the stream. And as I end the stream, so I'm not doing this completely alone. I'll bring Ed back. And of course, with you guys, I'll throw that up there. Make sure you like it, subscribe, alerts if you want. Cheers. Happy Sunday. I'm excited for this week to start. It's going to be a good one. Yeah, cheers. It's going to be, I think the bottom's in. Whether it's short term or long term, over the course of the next week, I think the bottom's in. And, not to get like into political stuff or anything, but I think that it's all about expectation. And if you set the expectation bar low, you have the opportunity to impress. And so I think that Trump did that in a lot of ways. The meeting with Zelensky, I have to say I didn't watch the full 40 minutes of it, but my impression of it was, and my impression really of Zelensky and the situation in Ukraine is that, I mean, they're a small country and that the U.S. has been supplying them with a lot. And eventually, if a small country has infinite amount of ammunition, they're eventually going to run out of people to fight. And so I feel like that's kind of what's starting to happen over there. And they're a smaller country. I know that I don't want Americans, military, boots on the ground. I personally, I don't want that. I don't want Americans to be dying. I don't want anybody to be dying over this stuff. I don't, of course, it was not right for Putin, for Russia to invade Ukraine. But with the interaction in the Oval Office, I think that Zelensky, I mean, Trump used an analogy with cards, the hand that he's dealt. I think that Zelensky's talking like he's a big country, but really he's a small country. He's just backed by a big country. And I think that if you look at the breakdown of the NATO contributions, as far as I understand it, the United Nations contributions, the U.S. is the leader. And I feel like a lot of that is probably due to the military-industrial complex, grifting, whatever is being exposed by Doge, stuff like that. And so, yeah, I mean, I think that there's some incentive in that way, but that doesn't necessarily mean that it's correct. So, I mean, like the U.S. is involved that heavily because U.S. politicians and the military-industrial complex are able to benefit from being involved so heavily in a war. But what I think happened, I think was, not necessarily the best thing in the Oval Office, but I think that Trump and Vance, however you feel about them, I think that they had their proposal. And I think that Zelensky was getting a little too greedy, a little too overly confident. I think that and so Trump and Vance just stood their ground, put him in his place, which was not a good thing in a lot of ways. But I think that from what I've seen today, just from watching some clips, that that the UK seems to be more engaged with Ukraine, and that they're going to be offering more military support to Ukraine. And so I think that it's good that the result of what happened in the Oval Office is other countries, NATO countries, backing Ukraine, so the U.S. doesn't have to take on that burden, the majority of that burden themselves. And then with the mineral deal, it seems like that might be able to be negotiated, whatever, so that there's an interest for the U.S. in helping to negotiate a peace treaty, a ceasefire with Russia. And so I think that, the bar on Friday was set really low, but the market kind of rallied around that. And so over the weekend, it's like, okay, maybe things aren't going to be as bad as we were expecting, but the bar is set really low. Other countries are starting to step up to provide support to Ukraine so the U.S. doesn't have to do it as much by themselves or as heavily. And with the announcement of the crypto reserve, I think that really the bar has just been set so low that there's only opportunity for good news next week. More news on crypto reserve, more news on the deal with Ukraine to negotiate peace with Putin and Russia. And the involvement of Europe, I think, why is the U.S. so involved in a European war? I think that the U.S. should be offering support to UK and our allies, not the other way around. And so I feel like with what's happened, it's like, well, if I'm the UK and I know my buddy, the U.S., is going to offer all this support, I'm just going to step back and I'm going to let them do that. But what happened on Friday in the Oval Office is like, whoa, our buddy's not going to provide that support. We actually have to step up. Otherwise, there could be some big compromises with Ukraine, and we don't want that. But at the same time, I think that this escalation with other countries, other European countries, UK, Canada, I also saw from this clip I was seeing, I believe France, Germany, this could be like, if the war is to be further escalated, I wonder if, like Trump was saying, you're gambling with World War III. I don't want that. And so hopefully what's happening is it's being escalated, but towards peace, not towards further escalation of the war, escalation of more countries being involved to reach that peace. So I think that we're set up for just a lot of good news, a lot of compromises being made for the greater good. And, so I think it's going to be a great week. But anyways, hopefully my take on that's not that bad. I try not to be that political, but I try to see the good in both sides, and I feel like I'm I'm an independent, so I try to embody that and try to hear out both sides and stuff. And I think that it's a tough situation, and seeing people die. And actually, one of my roommates when I lived in Miami is a Ukrainian guy. He still lives in the U.S., but his brother moved to the U.S. I think because of the war, and his uncle died a few years ago, maybe 2 years ago. He was killed in the war. So people are dying, people are getting killed, and it seems like it's just a never-ending war. It's a forever war. And whatever is going on with politicians, real everyday people, whether they're Americans, Ukrainians, it doesn't matter. If people are being killed, whether it's in the trenches or in the streets. It's not good. We don't want that. So I hope that it can be resolved um, peacefully without compromising Ukraine's integrity as far as their integrity against Russia. So it's a tough one. Yeah, yeah. It's like Nameless is saying you got it spot on. U.S. doesn't need to be involved. Too much killing, too much killing, and the thing that, to be honest, the thing that got me going on this channel, why I started this channel, was I was going through a breakup, having a tough time with that, and also kind of dealing with a breakup of the other channel that I had started, and it was on climate science education. That's kind of what my background's in, on oceanography. And I was kind of dealing with the breakup of recognizing that was going to fail. And I'll come back to that in a second because I think it's relevant to what's going on with Doge and stuff and cuts. But the thing that kind of triggered me to start, hey, I'm just going to make some videos on stocks, because why not, was the bombing, I think in October, or I'm not sure exactly what month it was, in Israel, because I just knew that defense stocks were going up. And it's like, well, I mean, if politicians make money on that, if the industrial complex makes money on that, I'm interested in the stock market. I'm just going to focus more on it, and I'm going to try to figure out how to make my way with it. But then coming back to like with Doge and stuff, I've been seeing, I'm not too active on Facebook or Instagram, but I've been seeing friends from grad school, from when I worked at universities, posting, that work for NOAA, which is the National Oceanographic and Atmospheric Administration. They are responsible for weather reports, weather forecasting, understanding, studying hurricanes, tornadoes, things like that. So whether it's research or forecasting and, weather predictions, stuff like that, information to the general public. I've been seeing some people posting about, their friends losing their jobs. And, in 2021, I left my career in academia doing research, studying the ocean, for a number of reasons. And I feel like a lot of my reasons are reflected in what's going on currently, whether it's with Doge or with the Trump administration. And so I feel like I kind of foresaw what was happening, but I feel like my actions were not necessarily based in a negative way, but more so on the positive side of what's happening. Or at least, I feel like I wasn't so cynical about things. But during the pandemic, there was shutdown STEM. Shutdown with STEM as science, I think technology, engineering, and mathematics. And shutdown STEM, shutdown, I think it was shutdown STEM, shutdown something else. But it was just to talk about basically DEI, a day of that. And it was during the pandemic. I was working from home in a small studio apartment by myself, having a hard time working, and I had to go to these meetings, Skype meetings or Zoom meetings, with these lab groups about, DEI stuff. And it's like, well, I mean, the reality is there are a lot of white men, straight white men, whatever, in academia. I'm one of those. And at the time, I had kind of fallen behind on the research. I had a supervisor that screwed me over, and that just set me back. And so I was just playing catch up the whole time. It's like, well, I'm playing catch up the whole time. I'm only making enough money to live in a small studio apartment by myself in a city, Vancouver, British Columbia. If you've never been, it's a super cool city. Beautiful, close to them. Oh my God, I got to go to Whistler again. I feel like so many things about that city I just love. And the experience that I had there, the girlfriend that I had there at the time, she's somebody that I love. Not the most recent girlfriend, but yeah, this girlfriend now has a daughter. She's engaged. I don't know if she's married, but just a wonderful person. And so I just have so many great memories, I think, from that relationship, from getting out of a bad job, moving to a new country, figuring out a job, getting to know the city, the mountains, just so beautiful, so wonderful. And but yeah, through my experience during the pandemic, it was just like, well, I mean, as a straight white male, I'm going to have a tougher time getting jobs because I'm a straight white male. I've also fallen behind on things, so I'm not as competitive. I haven't written enough papers to be competitive. And also, the papers are boring as fuck. So I'm not going to be able to, like, I'm just not engaged in that kind of stuff. It's like the saying in academia, the saying in science is publish or perish. So you have to be writing tons and tons of papers in order to stay competitive, but they're just boring papers. And it's like I'm doing a research project to study this one phenomenon. This is my hypothesis. Okay, that's a really interesting hypothesis. If that's true, that's really cool. But then you do the research and it's like, oh, well, actually, the results don't support that hypothesis, and it's actually really not that interesting. But regardless of the results not being interesting, you still need to publish a paper on it to be competitive. It's about quantity of papers, not quality of papers. And it's just like, this is just really not stimulating. I'm falling behind. I'm not making that much money. Where am I going to be in 5 years? I'm going to be in the exact same place. And so I left. I voluntarily left pursuing a career, doing research in academia, might have gotten a job in government, and I might be getting 8 months severance doing if I would have done that. So it's like, dang it. But I'm just seeing right now with the Doge cuts and stuff. I didn't really feel like. I mean, I think that research, studying the environment, studying whether it's the ocean, the atmosphere, the climate. I think climate change stuff can be a little iffy because a lot of that's on emotion and the geologic timescale. Climate change is based on a geologic timescale, which is thousands of years at a minimum. That's how it changes on a 1,000-year timescale. And we're talking about this climate change like it's happening way faster than that. We've disrupted it a little bit, so things will happen a little faster. But I think that what we've seen with Tesla really is that, the free market works. And that's what we need to be pursuing. And then we see all these attacks on Elon and all of this stuff. And so I just feel like I was ahead of the curve in leaving academia and leaving a career pursuing research, because now I'm seeing people getting their jobs cut and DEI is being cut, which it should be merit-based. There should be more representation of people who are not straight white men, but that should be based on merit, not based on fitting that criteria. So yeah, I mean, I don't know why I'm getting into this ramble, but I don't know. I'm just proud of the decisions that I've made. I feel like I've been made fairly well-grounded decisions that are ethically sound, that are morally sound. So yeah, and also, I mean, dealing with the political landscape, I think it's a tough time. We're just like a war-addicted country. And I don't know, I haven't been too affected by that because I didn't serve in the military. I was in AmeriCorps, so I did serve the country in that sense. But yeah, I mean, my grandfather was in World War II. He was a medic, and that really screwed him up. But he survived. Also, his brother survived. And yeah, I don't know. We all have heard stories of Vietnam, and I guess a more personal connection, but it's still fairly distant. I think it was in Iraq. It might have been Afghanistan. I'm not sure. But this guy that I was in high school with, we were in this some kind of civics class. I'm not sure, but he'd always fall asleep in class. Like, he was notorious for falling asleep in class. But he joined the military and he died in the Middle East. And yeah, I mean, that stuff shouldn't be happening. Whether it's Americans, whether it's Ukrainians, whether it's British, Canadian, French, Russians, it doesn't matter. Yeah. So, anyways, there's a tangent on that. But I feel like with the uncomfortable meeting from the Oval Office on Friday, I think that the outcome of it will be towards peace. And I don't think that will be in the benefit of Putin. I think that will be in the benefit of mankind. I think that fewer people will die as a result of it. And I don't think that Ukraine's integrity will be compromised to the extent that I feel like a lot of people are suggesting that Trump is like a talking piece for Putin. I don't think that's, I mean, to some extent, maybe that's true, but I think that to broker peace, you have to meet in the middle. And that's what Trump was trying to do. So you got to give people the benefit of the doubt. And hopefully, in the end, there's less killing. There's no more killing. And hopefully, the war machine stops grinding forward. And that, we can, I don't know, enjoy the markets in a more peaceful light, in a more progressive light, whether it's, technology and all the stuff that we're developing. I think that there's just a really exciting time. Lots of hope for a peaceful solution. I agree. So, and so I think that's how we're walking into this week of trading. So I think it's going to be a good week. I am excited about it. But if you do want my updated thoughts on the market during the week, check out Pre-Market Prep. I'll be doing it live Monday, Tuesday, and Friday. I'll have to record it before I go to work on Wednesday, Thursday. And then next week, I'll be able to do it live every day. And so, that should be just a nice way to get my broader perspective on the market. And so I'm just going to swig this. And I got the cherry, so I'm all good. And I hope you all have a wonderful start to the week. I'm really excited about it. I think that we, have hit the bottom of the valley, and I think that we got more upside, whether that's in the markets, a specific stock, the broader market, Bitcoin, crypto, or in the world. I think that we've hit the valley on Friday. And I think that things will be looking better for the world. But if not, then we got to reconvene and think about it. So, let's not pick sides other than the side of people living, surviving, humanity, all of that. And bickering one side versus the other, I don't think that's helpful. Whether that's an intra or national scale, we're all people. We got to take care of each other. So, with all that being said, thank you so much for hanging out. It's been fun. And I look forward to streaming in the morning for